If you bought the dip in August, it paid off. If you bought the dip in September, it paid off. But right now, we're only 1.4% below all-time highs. And so the big question is, have we dipped enough in October to begin to confidently buy, knowing that by the end of this month, we are moving closer to the election and a possible rally and a possible blow off top? That's the question. Have we dipped enough to begin to buy these markets? Well, tomorrow we're getting the non-farm payroll and the unemployment report. Talked about it all week. This is what the Fed needs to see to determine whether he should be more aggressive in his rate cuts, if he should get more dovish. He's been perhaps too hawkish and didn't cut sooner. There's a lot of people that still think that if this unemployment report comes out poorly, that it shows that he should have given a 25 basis cut in July. That failing to do that has compromised the strength of the economy, and it's possibly pushing us into a much worse recession than we would have to deal with. There's a lot of big questions on the table. We have things that are driving the economy like AI and a ton of development. But the fact is, even though these are very bullish in the long term, initially they cost a ton of money to invest in. We know that that's what's driving NVIDIA stock higher, is that people are getting set up to lay the AI foundation for future profits. But we also know that stocks go up when money is made and when profit margins increase, not get compressed. And right now, going into Q3 and going into Q4, we're going to find out whether or not people are making more money and whether or not these stock prices, which are at all-time highs, are justified. Now, I've got some interesting plays to go over with you today, a couple that I called out this morning in my pre-market overview, and a couple that are on watch for tomorrow, and all of them potentially are profit-making opportunities for you and for me. I'm going to lay out my idea behind them, and I'm going to lay out the technicals for you. This is the Stocks with Josh show. Appreciate you hitting the like. Appreciate you showing up and watching. Drop a heart, say hi in the comment. Watch out for scammers. If you want to join me and trade with me throughout the week, learn to chart and trade with my crowned traders. These are all people with different levels or areas of expertise. You can join the Stocks with Josh Discord. It's a trading community. I've got some great guys. I have to shout them out. Spy Lord, which I'm going to try to have join me on one of my live trade sessions here in the next week. Sniper, sharing his plays and research. Wolf of Gatsby, out on a line, making big decisions every day. We've got Stock Brother giving penny stock plays for those who are trying to grow small accounts. We've got Mark with Tribal Trades answering questions and providing trade alerts on crypto right now, and he's brought some great plays to the community. And recently, we added Professor Salmon into the ChartGoat University as someone providing his research as well as the plays and his investment decisions. And I've got another channel I'm soon to add on options I think you guys are going to love. So don't trade alone. Come join the Stocks with Josh Discord. Now, if you want to meet me, I'm going to be in the Chicagoland area, specifically Maryville, Indiana, with Stock Up with Larry Jones and Chris Sane. He's got an event there, Larry does, called Music and Money. It's going to be a great entertainment as well as an educational opportunity. It's going to be a wonderful evening. Come join me. I look forward to meeting you guys there. So in my pre-market overview on the Discord today, I shouted out a couple plays. One of them was CEG, Constellation Energy Corporation. This is a stock that's absolutely been screaming higher and gapping up. And I alerted it as a play pre-market and jumped into call options right at open, and those went up 60%. I also shouted out NVIDIA. I said, guys, if we get back above 122, we're going to break out and climb faster. We did that. Now, NVIDIA cooled off, and I did notice towards the end of the day a potential head and shoulders pattern. However, it's right on that line where we could easily break out again tomorrow morning and go as high as $126 to $127 and then pull back. I do think that the market's got more pullback in the next couple weeks before we can officially begin to buy the dip. So watch those plays very carefully. And I'm going to remind everybody, one of the most important trading disciplines that I employ is to watch position size. And in an uncertain and choppy market like we have right now, where we are actually, the trend is currently pointing down so far in the month of October. And here's the other big thing I want to remind you guys, because I've actually made this mistake this week. I've been up on plays but got greedy, expected more upside. And I've been noticing that there's been a lot of selling into strength. We saw that earlier with Tesla, and today we saw that with NVIDIA. And so watch where we are getting a rip. Watch those candles. How much rejection or wick do we get on the top before the end of the day? So let me know in the comment section if you caught that CEG play or if you caught that NVIDIA play from my pre-market alert. And then let's talk a little bit about Tesla. I've warned for the last 2 days that it's been on a downturn, and today it got pretty ugly. Now, it ended the day on support. I'm going to be watching Tesla very carefully because I would like to catch the opportunity to ride it back up because I believe there are catalysts ahead of Tesla. However, if we go into more selling pressure tomorrow, we could lose a critical level of support on Tesla, and it could come all the way down to 236. And if we lost 236, then we could come all the way down to 229. So I'm going to wait until I see some signs of strength. I'm going to wait until I see some candles that make a new high, specifically on the hourly chart. All right, I'm going to get into some other hot plays, and I'm going to show you some charts today, but I want to talk a little bit about the larger macro environment that we're in. One of the things I've been pointing out in my pre-market overviews is that gold is consistently rising. Now, I've been noticing this flight to safety. Whenever gold begins to go up, it's another indicator that there is a recession around the corner. And I just want to try to utterly wipe out the notion from the permabulls that we aren't going to have to deal with some sort of a pullback. We are definitely going to face a pullback. The question is when? Well, we have been hitting all-time highs repeatedly in 2024, and I still think that we're going to have some more all-time highs ahead of us in 2024, but ultimately that story is going to come to an end. And I'm going to tell you guys that there's a lot of people who are already telling us as they're selling into the uptrend now and they're rolling money over into gold. There's a lot of people that are preparing for the recession ahead. And I wanted to ask you guys, are you preparing for the recession ahead? Now, gold in and of itself is an indicator, and it's going to tell a story about how deep the coming recession might be. Gold is up 30% right now. And if it stabilizes at that point, it means that in the days ahead, we might only see a 30% pullback on stocks. However, if gold goes up 40 to 50% preceding this recession, it could indicate that stocks could pull back as much as 40 to 50%. Right now, we're sitting at around a 30% uptick ahead of this potential recession. And so right now, that causes many to believe that this might not be as severe of a recession. In addition to that, I want to point out something about debt and household savings because there's an interesting alignment with where everybody's at with their collective debt as to where they were at back in 2008 before the Great Recession that we experienced then. Interestingly, we're at an all-time high for consumer debt. We have never been in this level of debt as a nation. And I'm not talking about the government debt. I'm talking about all of the collective debt, the home loans, the car loans, the credit cards. We're sitting at $17.8 trillion collectively as citizens of the United States. Then another record that we broke here in 2024 was credit card debt. We are currently above the all-time record that was set in 2019. We're currently $215 billion deeper in the hole than we've ever been before. And then another area where we're breaking out, but it's not a good area to break out, is loan delinquencies, payments that are more than 90 days behind. We are at a record decade level on not paying back those steep loans that have been taken out. So guys, this is just another indicator similar to the gold indicator that we are going to have to deal with a recession. There's going to be a price to be paid for not paying back these loans. It's going to have an impact in companies and economies that are not making profits. All of that eventually rolls out, and all of that is why the Fed has been easing. Now, what's the number one reason why we're in debt? Well, it's inflation. It's the cost of inflation. It's why the Fed had to do something to deal with inflation because people can't afford the cost of living and they're putting everything on their credit cards and they're simply not paying their bills. And that's the reason why the unemployment report tomorrow is so critical, because we need to see whether or not the Fed needs to ease even more. All right, let's hit the charts. I'm going to go over a couple important charts that I want you to see before tomorrow. First off, Meta had a very strong day today, and we're pushing up against all-time highs on Meta. And this is one that I'm going to be watching for a momentum play in the morning. If we push above 583, then I think we could squeeze all the way to 588.75. I do expect that we'll hit this top resistance level on my ascending channel, which is bearish, and I do expect that we will likely break to the downside. Initially, I'm looking for calls in the morning, and then when we get to this area, once a reversal is confirmed, I will then jump into puts on Meta. But Meta right now is showing incredible strength. Let's talk a little bit about how bullish Meta is right now in the long run and how high we might possibly go once we get a bigger pullback in October. RBC adjusts price target on Meta platforms to 630 from 570. So guys, I just want to make it very clear. Analysts are not talking $500 range anymore for Meta. They're talking the $600 range. And we are very, very close to making that move. Let me know what you guys think of Meta. It's been hot for quite a while. It's been trending up even when the markets were pulling back. It had a beautiful day, even though the markets didn't have a great day today. It finished right at all-time highs, and I think tomorrow could be a breakout morning. Let me know in the comment section if you are interested in Meta or if you're in it right now. I'm going to be looking to buy some calls in the morning. Okay, I think one of the second most important stocks to be watching is Tesla. Now, Tesla finished the day sitting on support, and it didn't bounce. So that is kind of scary because tomorrow it could break through that support and begin to continue to fall. So first off, we have a concerning potential MACD cross under, which would be in and of itself a sell signal on the daily time frame. 241 is a critical level of support, and it finished the day unfortunately right below 241. Let's zoom in a little bit on this price range. So we finished the day right below 241, and I had told everybody in the Discord that I would be a buyer today if we had finished the day above 241. Well, we didn't. We've essentially broken and crossed through that price zone. And so I will say that there is a chance if tomorrow the market likes the non-farm payroll and the unemployment report, there is a chance that we could get a little bit of a rally going and a bounce off of this zone. But I am also concerned, as I indicated in my open, that this could be the type of rally that gets faded. So I would say both today's ending wasn't a buy signal. The MACD is concerning. If we pop tomorrow, I don't know that this is the moment to go long because, as I've also said in my opening, I don't know that we have dipped enough in October to justify buying the dip. Now, there are obviously catalysts ahead for October. 10/10 is going to be a big day. And at the end of the month, October 30th, we're going to have earnings. And I do ultimately see Tesla going higher this month. But the question is when to get in. And it has to, at this moment in time, surround these important trend lines that I give you guys, this 241. We have to show strength above that line. Now, here's the other line I want to give you. If we get back above 253, the bears should be absolutely terrified, because if we close this next time a daily or weekly candle above 253, I believe that Tesla will go to 276. At the moment, we're just facing some choppy waters, and tomorrow's going to tell us a lot about Tesla. So I think that we have the election catalyst ahead of us. I think after that, the market's already been telling us for quite a while with the rate cut that we got from the Fed, and we'll see what the data for unemployment is like tomorrow. But the fact that institutional money is rolling over into gold and being more risk off, all of these things are telling us that you want to be prepared. Two things. Consider buying the dip in October, right, for that big pump up, but also consider selling these rips in October and November. Now, I'm not giving you advice on what to do with your long-term portfolio. In many respects, I'm talking to the swing traders and the scalpers out there, and for those who are trying to grow small accounts. If you're a long-term investor, I probably would build my cash position and look for better buying opportunities and bigger dip opportunities. And then let me give you one more signal that I believe will mark the beginning of the recession. And that is a classic view of the S&P 500 weekly charts, a break of the 20 EMA. I believe that as it moves higher, it can occasionally break the 20 EMA, and it's not a problem. That just simply gives us an expected correction. But this time, at this moment in the markets, I believe that when we break it this next time, it won't reflect a correction. It will reflect the beginning of the coming recession. Now, that could happen in December or January of next year, but let me show that to you in the charts as well. Okay, now we're looking at the weekly time frame, and you can see that on occasion, a strong market will come back and test the 20 EMA as a last line of defense on a continuing market that's in a rally, in an offensive move. Even here we came back. This was a full 10% correction, which is also normal for a market that's moving higher. However, when you begin to see the market test the 20 more often, as we have here repeatedly, I think that at this point, this repeated testing of the 20 EMA is foreshadowing that once we actually do make a blow-off top all-time high to these markets, I believe that the very next time we come back and hit this 20 EMA, we're likely to break through, and that would be the beginning of the recession. So keep an eye on that 20 EMA. Let me know how you guys are positioning yourselves right now. Are you prepared to buy the October dip? How confident are you on a late October and November rip? And if we do rip, are you just going to continue to invest confidently in an AI-driven economy, or are there going to be some profit taking on that rip ahead of us? Let me know in the comment section. I'd love to hear from you. And don't neglect the Stocks with Josh Discord. I'm live trading there tomorrow morning, and we're going to be looking at some of these stocks that I shared with you today. Peace and blessings, everybody. Take care. Thank you for hitting the like and the subscribe, and catch me on the next video. Talk to you later. Bye-bye.